Hey folks, see Rachana Ranade here, and I welcome you all to a very interesting concept which we have talked about so many times in our videos, but I have never discussed it as a separate topic. So today we are going to talk about DXY. Okay, not this DXY. DXY, also called as DXY, also called as dollar index. Okay, so what are we going to learn in today's video? 3 key points. Number 1, what is exactly DXY? Second, we are going to talk about the relationship between DXY and Nifty and why is it important for retail individual investors to track DXY. And the final thing, whether there is any thumb rule to interpret DXY. Before we continue with the video, if you can dedicate just one weekend to invest in yourself and to make your career colorful, I would highly recommend joining this 3-day weekend AI training program. It's valued at rupees 10,000, but I'm thrilled to offer it to you completely free thanks to our partner for today, Outskill. It is the world's first AI-focused education platform which is backed by renowned AI investors and AI founders. This 3-day program offers 16 hours of live AI training spread across 3 days happening from Friday to Sunday. As I mentioned earlier, it is a paid training valued at 10,000 but exclusively for my audience, you can attend it completely free. In this program, you learn prompt engineering, no-code data analysis, AI in Excel and presentations, and a lot more. And that's just the beginning. Professionals from tech and non-tech sectors like sales, marketing, HR, operations, and even business owners and freelancers have attended it and have loved it. Over 1 lakh people from 40 different countries have already participated in this program. In fact, I'm getting all my team to attend this workshop and I would definitely recommend you to attend this. Slots are filling up faster than ever. Click the link in the description and pinned comment and book your slot. Now let's understand the simple meaning of DXY or DXY or USDX, whatever. We are going to say DXY henceforth, okay. We have to understand the simple meaning. It's nothing but the measure of the value of United States dollar against something. So what do we mean by that? See, whenever I'm using USD INR, what does it mean? It denotes the value of USD against INR. Simple. Now if I'm talking about DXY, what does it mean? It denotes the value of USD against a basket of 6 currencies. Okay, so instead of one currency INR, now we are talking about a basket of 6 currencies. Now, which are these? These are Euro, JPY, that is the Japanese yen. It's GBP, that is the British pound. It's the Canadian dollar, CAD. It's Swedish krona, SEK, and also the Swiss franc, which is termed as CHF. Okay, so all these 6 currencies, that's a basket of 6 currencies. Against that, we compare the US dollar. That is how we call it as DXY. Okay. Now, are all these 6 currencies having an equal weight? Answer is no. Euro gets the highest weightage with 57.6%. And then you can see on the screen that the weightage then goes on decreasing from Euro to Swiss franc. Okay. Simple. So I hope you have understood what is the simple meaning of DXY. When was it launched? Back in 1973, and it was launched by IC, that is the Intercontinental Exchange. At that time, the base value was kept at 100, and typically the value ranges somewhere between 70 to 120. But then now that we know the basics of DXY, the important point is what is the relationship between DXY and Nifty and how or why is it important for retail individual investors? That's what we are going to understand in the next section of the video. Starting with the relation between Nifty and DXY, and for that what I've done is I've already opened TradingView. I've just put it on a line chart instead of a candle chart. And what I've done is I've also added the compare funda. So how can you do that? Basically, you add whatever symbol, start with a basic symbol that you want and just click on plus that says compare or add symbol. So that is how I have 2 symbols. The red one is Nifty and the blue one is DXY. Okay. Now what can we see here? Typically you can see what happened during the Russia-Ukraine war. You can see a Nifty went down quite sharply, and that was the time when DXY actually rose. Correct? We'll try to see a few more instances. Now you can see here that when Nifty was again rising sharply, that is when DXY was going down. And currently what you can see, if I were to zoom in a little bit, currently you can see that Nifty is, when DXY was going down, Nifty was going up, but absolutely towards the end. Now this is June 25, latest data. You can see last 1 or 2 months, Nifty has been going down and DXY is slightly going up, or I can say it's more or less like sideways. So what can I conclude from this? Generally, I repeat the word generally, there is an inverse relationship between Nifty and US dollar. Okay. Will there be certain instances where there'll be decoupling? Decoupling means this relationship will be lost. Yes, there are possibilities for that as well. But you have to remember this as a thumb rule, that there is generally an inverse relationship between Nifty and USD, Nifty and DXY. But as I mentioned, it's the word generally. Now, this is about the index level. What about sectoral level? Now, whenever DXY goes up, that's basically dollar is strengthening. If dollar is strengthening against 6 major currencies of the world, obviously dollar is also going to strengthen against our own INR, correct? Now, what would happen with this? If dollar increases, something like crude oil prices, they are ideally going to shoot up. For us, crude oil imports are going to be more expensive. Rather than crude oil prices shooting up, I'm talking only about dollar terms. For us, it's going to be more expensive to buy crude oil. And is that going to have a negative impact on Nifty? Answer is obviously yes. What could be a sectoral impact? So if DXY goes up, ideally sectors like tire, aviation, paints, they could go in a downward direction. But if I'm talking about export oriented sectors, something like IT, if we are talking about a strong US dollar, obviously IT firms are going to be the beneficiaries, because a strong US dollar is going to fetch them more INR. So I hope with this you have understood about overall relationship of DXY versus Nifty and the impact that DXY has on various sectors. Now let's understand about different factors that impact DXY. Okay, first things first, we are just taking examples. Okay, I'm not saying that these are only the 3 factors which impact DXY. Just to give you examples, 3 factors. Number 1, it's about US interest rates or the Fed fund rate. Typically, when Fed fund rate increases or goes up, DXY is going to go up. Question is why? See, whenever FFR or the Fed fund rate goes up, their bonds are going to be more attractive. US bonds will fetch higher interest rates, correct? Now, if there is an institutional investor in the US, for us, for Indians, it's going to be a foreign institutional investor. But for such an institution which is based in USA, they may say that rather than investing in India and having some, of course, there are going to be some risks involved if they are investing in equity, plus there is going to be currency depreciation. Rather than going on to all these points, if they were to invest directly in US bonds issued by their own government, could that be a little bit more attractive? Yes, typically when US interest rates go up. So that is the reason why what will happen, they would sell INR, they will buy USD, and because of which the demand for USD will go up, the DXY will go up. Okay, so I hope you have understood the difference, the relation. If overall US interest rates increase, FFR increases, US dollar index or the DXY will go up. Okay, if I were to understand about one more example, US economic data. Now this is again a similar logical extension to it. If the overall US economic data is very strong, GDP numbers are good, unemployment rates are down, these are just 1 or 2 examples. If their data is very strong, obviously their currency is going to be strong, DXY will be strong. Okay, one final example, geopolitical events. See, whenever there is a global turmoil, all the countries also, they would want to park their money in safe assets, and obviously US dollar is considered as a safe asset. In this case, what will happen? The demand for dollar will go up, and because of which the overall DXY as an index will also go up. So I hope you have understood the overall or the different factors which could impact the DXY. In the next section, we'll try and understand, is there any thumb rule for interpreting the DXY? Now, you can see on the screen the chart of DXY, and you can see here, this is starting 2015. Okay, what happened in 2015? This is a level of 100 point whatever. That's okay. We'll round it off to 100. It saw a resistance, came down, again saw a resistance, came down, again saw a resistance, just 2-3 candles up here, again came down, again a resistance here, came down, again a resistance, but this time it broke out. Once it broke out, it climbed up to almost 115, and if you remember, that's what I told you, right? This is when the Russia-Ukraine war was happening, and that's when Dixie climbed up like anything. Now it came down steadily. So of course, if you know basics of technical analysis, once a resistance, now it's going to act as a support. So support number 1, support number 2, and then eventually it went down, and currently it is trading below 100. Now 100 is going to act as a resistance. So all in all, you can say that 100 is like a thumb rule. You can say that there's no official thumb rule per se, but I'm just giving you a practical tip, okay? So just in case if you see that it's steadily above 100, it is climbing above 100, it's going to be bad for the Nifty. Anywhere where it is going to go down below 100, it's going to be ideally a positive sign for Nifty. But please remember that this should not be the only thumb rule that you should check. It should be calculated with other factors as well. I hope you found a lot of value in today's short and sweet video on Nifty, and you will definitely find this to be helpful. If you still have any questions around this, please let me know in the comment section. We would love to answer those as well. If you found value, as I mentioned, don't forget to smash the like button. Don't forget to share the video with your friends. I'll see you in the next one. Till then, take care. Jai Hind and bye bye. You might have come across such advertisements on various social media platforms. Please note, all of these are fraudsters promising unbelievable returns through stock tips. I don't provide any calls or advisory services. I provide only educational content through my social media handles and through my website rachanaranade.com and rachanaranade.in.